Welcome to the Default Profitable Podcast. You're listening to the next episode. Today, we're going to focus on a business banker and one of the people that helps businesses grow. I'm your host, Matt Nettleton, and today my guest is John DeLucia. John, welcome to the show.
Hey, thank you so much, Matt.
It's funny, I was talking to Ken, and your name came up, and I think I've known him and I've known you for probably 20 plus years.
Been a long time.
Yeah. So why don't we do this? Why don't you take 2 or 3 minutes, introduce yourself and tell us what you do, and then we'll talk about why it's important. How about that?
Sounds good. No, Matt, thank you so much. Again, we've known each other a long time. My wife and I have been in Fishers for 30 years, our adopted home. I am the Chief Lending Officer for Citizen State Bank, headquartered in Newcastle, and been there 11 years. And we are really laser focused on small to medium sized businesses that need consistent access to capital. Really, many of the people that have been on this podcast, which I have enjoyed immensely. I think why it's important, I would say I'm a reformed big bank guy. You know, nothing wrong with the big banks. I have friends at most of them, and there's some very, very good bankers. But in this space, it's just difficult for them. I kind of refer to myself as the Hoosier banker, and the question is, who is your banker? Because I still think banking is a very noble profession. Took some hits in the financial crisis, kind of redeemed ourselves a little bit in the PPP world. But for a small to medium-sized businesses that needs consistent access to capital, having a relationship with a banker and with a bank that is capable of that is critical.
Well, I actually agree. And one of the big things that's come up on every episode almost has been small business owners' lack of business finance literacy. So let's talk about how you became a small bank banker. Like what was your evolution? Because at one point you were doing mortgages.
Yeah. Oh, yeah. Yep. So I spent almost 10 years, I will say, in miscellaneous financial services. The last, 23 has been in traditional banking. So I came in retail, branch manager, trainee, kind of ground up, and really fell in love with the business lending piece. I had done mortgages and cars and mobile homes and all kinds of crazy loans, but the business lending really attracted me because it's a little more complex, not quite as commoditizable. And then there was just a real need in that space to help kind of educate, articulate, and navigate that world, because it's very, very confusing. There's a lot of very sophisticated business owners for sure, but there's many that you just don't understand it because you haven't done it. And they just really need that assistance more so than just, like a mortgage or a car loan or things like that.
Which mortgages and car loans are pretty straightforward. They're checkbook issues. People know how to, you have more money than you spend, you're probably doing okay. But on the other hand, when you get into business lending and you're managing an inventory and you're managing cash flow and you're managing receivables and payables, and all of a sudden you have a whole bunch of tax issues. It's a different world. So you do mortgages and general lending for 10 years, and then you go and you get into business banking, and you were working for one of the bigger banks.
Yeah, 3 of them, actually.
Yeah. Well, didn't they kind of roll up into each other? Or
not exactly, but I moved up in size.
Yeah.
Yes.
So what's the difference, or what makes the difference to a local business to deal with a local bank? Let's start there.
That's a great question, because you think about it, if you're a huge corporation, right, super regional or national, by your nature, you just have to build guardrails and efficiencies and speed. It just doesn't allow for as many exceptions for a whole bunch of reasons. Again, doesn't make them bad people. But as a local community bank, we understand the difference between right? This neighborhood, that neighborhood, this business, that business. You really kind of get that soft knowledge about the people and the owners and how they are conducting themselves in the marketplace, which allows you to make decisions that the larger folks can't. Now, it's not like loosey goosey. I mean, we are very, very conservative. I mean, we are lending, people's deposits. We take that very seriously. We're regulated. So again, you don't want to be caught up like in those old non-conforming mortgage. Oh, flexible, makes sense. No, none of that. It has to make sense, but I mean, it has to really make sense because we keep everything. We service everything. So we're committed in the long haul. But that's really the difference is we can understand different entities, different collateral type of pieces where we don't have the silos. So if it makes sense to do a residential mortgage for someone we'll do it, right? Or home equity, sure, we'll do it. Or a business, it's all Matt Nettleton and his LLC and this, that, the other. So the key is that owner, right? Their business acumen and kind of the confidence in them, I think, is really critical. And we can get to know that better because we're right here.
So, one of the questions that I ask business owners is, did they end up in business because they loved the industry, or did they end up in business because they saw the opportunity? So the question I have for you is, did you end up as a business banker because you love the business, or did you end up because you're like, hey, I can make money doing this?
I love it. I mean, I'm a little corny in that way. I just love it. And I love it here even more because I understand the difference and value how extraordinary it is what we can do and the difference that makes, in the business, and their families. And yeah, I absolutely love it.
All right. So what are some of the things that you've learned over the last 23 years as a business banker? What are some of the things that have made a difference in your career?
Well, it's interesting. Are you going to ask me the business plan question, or can I throw that? Because I love that question.
You can do that.
And I love that answer for your regular listeners, right? Because I thought, well, they're going to want to know. I love people that do business plans. I recognize many don't. I acknowledge, hey, this is not going to be perfect, but going through that process is a great experience. We work with like the ISBDC quite a bit, and then reviewing that after a year, I think is so critical. But my biggest lesson, from way back when, and it's difficult for some owners to understand is, well, and your title, right? Default profitable. You have to make money. Right? You're a business. I mean, you have to make money. And I'm not going to loan you money to fund your loss, right? So let's identify, right? You have working capital needs because of inventory or receivables, or are you losing money and you just don't know it and you want a line of credit because that's what everybody says to get? That's probably the biggest one, is really having that conversation. Hey, I want lending's in my title. I loan money for a living. However, I have to sleep at night and do it responsibly. So let's make sure you're making money and that you understand how you're making money. And that's where kind of understanding their financial statements and balance sheets. And there's been some people in town over the years that really drive that home. That's critical, I think, for a business owner to understand at least monthly, ideally quarterly, hey, how are you doing? And you can't, it's good you have money in your bank account, you mentioned earlier, but what, how are your payable bills? How are your receivables? And just understanding that. And you have to make money to do anything. And you run into situations, very generous, charitable people, but it's like, well, you can't give what you don't have.
Right.
Got to make money, period.
Well, and so that's one of the things, the piece of advice that has really kind of rung true with me the whole way through this is you should never save money on your attorney or your accountant.
Right. That's right.
And it amazes me the number of people who, rather than getting an accountant with consistent balance statements and cash flow reports, they get a bookkeeper who pays the bills.
Right. Yeah.
And then what they need is somebody that can give them real statements and real intelligence on what's happening in their business.
Yeah. And then, recognizing when maybe they need a fractional CFO. So what we do, we actually have this conference table, and, accountant, attorney, financial planner, banker, of course. And basically, we're trying to earn a seat at your table, but we want to understand who else is at that table. And it's really powerful, Matt, because the question is, well, who is your CPA? Well, so and so. Well, are you happy with him? Oh, yeah. Well, if they're happy with them and we don't know them, hey, can you connect us? Or if you're not delighted with them, are you open to us suggesting a few others? Similar with attorneys, I agree with you 100%. Operating agreements, I didn't even know what they were, right, 20 plus years ago. Now I've seen, oh, yeah, you really need an operating agreement, because if you don't, and things split up, it's ugly. I mean, life experience really helps emphasize how critical those kind of advisors are, and setting it up right, having the operating agreement, maybe buy sell agreements, things like that. Yeah, you don't want to scrimp on those things for sure.
Yeah. So you mentioned planning. So tell me what you've learned about planning. I mean, and this is so Ken Karit was just on.
Oh, yeah.
Right. So we talked about this, and he's obviously very detailed, and he had a very detailed business plan that was 100% inaccurate, which I think is pretty typical for a small business owner. But if somebody comes to you and they say, well, here's my detailed and, volume thick business plan, what's that? How do you approach that? What do you look at as a banker when somebody comes to you with a plan like that?
Quite honestly, I hate to reduce it to this, but so much of it really is the numbers. And are they quantifying realistically, what they're going to do? I mean, the story matters, the industry matters, but really, how are you putting that pen to paper realistically? What are you going to sell? What's your revenue going to be? And Ken's one of the best planners I've ever worked with, and does a tremendous job. Because the key is the exercise is healthy. You're going to be off, and how do you adjust? Where were you off? Why were you off? Because sometimes you see real pie in the sky stuff. It's like, I just don't think you're going to sell right that many Tootsie Rolls, next year, and you can't. You're going to sell so many Tootsie Rolls, so it matters. How does it correlate to the numbers, and how serious were they about it? And here's the key thing, Matt, that I say is, hey, don't do a business plan for me, right? Don't do a business plan just to borrow money. Do a business plan for you, because it's your business. Now show it to us, and we can help use that as a point towards the loan. But don't do it for the bank. Don't just plug in a template. Really put some thought into it.
Yeah, and that's probably the big thing. Like for my end, I look at them. The plans are useless, but the process is pretty valuable.
Right.
And if they can go through the process and they can justify and they can understand, a lot of times they seem to learn.
Yeah.
So, we all, we live on the north side of Indianapolis, and so we all know people that work for the big megacorps, and you probably get the same conversations that I get, where somebody goes, hey, listen, I work for megacorp and I'm thinking about going out on my own.
Oh, yeah.
When somebody says that to you, how do you react? What do you say to them?
Well, basically, why, right, is the big one. What are you looking to do? What's driving it? The other thing, really, from a borrowing standpoint, is, set up as much as you can while you've got that big pay stub and W-2, because it's, when you walk out that door, it does become a lot more difficult. So we're really just trying to understand, what are they trying to do? Why are they going to leave big corp, big salary, big benefits, all those things, and really try to be very candid with them. Hey, how long, are you prepared to go without a paycheck? And, what kind of reserves do you have? Because sometimes it's starting to position, and maybe it's 6 months, maybe it's a year. Hey, talk to this person, talk to that person, work on your plan while you're on the clock, so to speak, rather than the worst is, right? Hey, can we get together? Hey, look, so I quit yesterday. What do I do? It's like, ooh, that's, that's jumping off right there for sure.
Yeah. That is Although the number of people who quit yesterday and now are like, hey, now that I'm done, I need a plan. Help me out. It's shocking.
It is.
And I'm not a great planner, and it's shocking.
Yeah.
So,
oh, yeah. No, I agree. 100%.
All right. So let's pretend somebody hasn't just quit and they're just, they're getting ready to start. It's the night before, and John DeLucia, 2024, with the wisdom and experience you have, you get to sit next to them at the bar the night before they open their business, and you say, listen, it'll work out, but here's the first thing you need to focus on. What's the first thing a new business owner should focus on?
How are you going to get paid? Right? Who's going to pay you to do what you're doing? Who's going to buy your stuff? And you've got to get the revenue going as soon as possible. I mean, it's just cash flow, right? Cash is king. And I think that's sometimes I think there's a tendency to, well, I want to wait until I have this, and this. Well, that would have been great a year ago, 6 months ago, 3 months ago, or today. But if you're going to go, let's go. It's go time, and really whatever that business is, doing that new client acquisition, getting the revenue going as quickly as possible, for sure.
Yeah, and I just want to point out that you talked about getting the revenue going, not putting together the good email list, not taking out the great advertisement, not doing a flyer. It's you got to get money.
Yep. Yeah, no, and I tell a funny sidebar. I was a insurance agent for a couple years, almost 30 years ago, and I did it all. I was a terrible business owner, which has helped me guide others, right? Because I'm not doing it. But I'll never forget my boss with the insurance company. He always said, hey, don't forget to sell something, because I had the almanacs, I had the ice scrapers, I had the IU calendars, I was in the chamber, I was in BNI, I was doing this and doing that, all very well intentioned, and I've learned this, that you can say you can network your way right out of a job, right?
Yes.
Sometimes you got to find who's going to buy your stuff, who's going to pay you, and you got to talk to them. You can do some of the other things, but yes, you got to get right after it and not wait for the perfect email list or the website or all that stuff.
Yeah, whatever it is. All right. So any advice that you would give somebody? I mean, you've thrown out a lot of stuff, but somebody that's a new business owner thinking about starting a business, any other things that you would say to them? Any wisdom you would share?
I think having the funding plan, idea, resources as best you can, right? You can't have it perfect because your ability to borrow, right after you go is tough. Now, there are some loans you can do when you start, but 3 months, 6 months, they get tougher because you get worse, not better. So the more planning, especially if we're using that comparison, someone with a nice job, the more planning, the more prepared. It doesn't have to be perfect, but beef up the savings, really get a big home equity line of credit while you can. It's just true as a backup type of plan. Just so when you go, you go. And I've heard, just some of your other folks on here talk about that, because you can do a lot of those things, while you're working, still doing a good job, but in the evening, on the weekends, and the planning, because once you cut off the paycheck, it's go time.
It's a different world.
Yes, it is.
It's a different world. Well, I think the big thing that I want to get into people's mind, and it's something that I've noticed over my 20 years working with small businesses, is there's a difference between having a bank and having a banker.
Mm-hmm.
Right?
Exactly.
And so a bank is somewhere where you might have a savings account, you probably have a checking account, you might have CDs, there are different things. A banker is somebody who can help you understand why you have them and what you need. And so, I think that's one of the things that I've seen over the years, that really smaller banks for local businesses really help on. I mean, I'm just going to throw this stat out and see what your reaction to it is. But according to a database that I looked at, there are 24,000 EINs in the 317 area code.
Wow. Okay.
which is a huge number of businesses. And all of those 24,000, because I cut it off at $50 million of reported revenue. And that's not, the big banks aren't looking for that. That's where you're more valuable.
Absolutely.
So
and another thing to your point there, yeah, I mean, that is a big number. There is a huge space. And really you have to grow to a certain point, right, to make sense to have a business banker. But what I say is, hey, if you have a problem and you're going to call an 800 number, you really have a problem, and kind of have operational risk. Because in banking, nobody ever in the history of banking has gotten fired for saying no, right? So it's easy to say no. But if someone knows you and knows the situation, it helps, because, all the goofy fraud stuff and the wire stuff and the funds availability stuff, someone that knows you, trusts you, is going to go that extra mile to help kind of keep those things moving it's critical. I think that's the other thing. I mean, I focus on the lending, but the relationship. So not just that, because the fraud is crazy. So having that fraud protection, kind of working with the treasury management people to make sure their deposits are protected, because it's, believe it or not, one explanation I've heard is because of that chip card on the credit cards has really reduced that so much. So check fraud is going through the roof, and ACH and all that stuff. So really critical to have a good, treasury management, good understanding on that side as well, because you can lose money in a hurry that way.
It's funny because every time we get into a little bit of you start talking and using banking terms, and I hear Charlie Brown's teacher, because none of those words make any sense to me.
So sorry. Yeah. Wah.
But that's what you need a banker for. That's the same reason you need an accountant, the same reason you need an attorney. They know things that I, as a business owner, not only don't know, but really I don't necessarily want to know. I want to have somebody on my team who understands it. So
yeah. The other thing, Matt, too, kind of that person the night before, I don't know that it's I didn't do this until a lot more recently, is, where do you envision this ending, right? Is this going to be a family business you pass on to your kids? Is it going to be something you sell? Is it going to be something, because with all the boomers and you see all this stuff, but there are still a lot of business owners that think, well, my business is my retirement. Well, maybe, but you can't start early enough. So we start asking that question, 30s, 40s. It's never too early to think about that, especially when we're doing annual reviews and we're looking at, you're going to buy some, buy stuff, buy a building, do whatever. Hey, what do you think? You're not going to know necessarily, but just planting those seeds early. And you only get that in a long-term relationship with the confidence, because some, real hard charging business owners intimidate their service providers, and they get bad service as a result. So if somebody's telling their account, I don't want to pay any more taxes. Okay. All right, pal, there you go. And there's trade-offs for that. So I think that's important to have a banker that's comfortable to challenge you, to question things, and not to just be an order taker, because there could be perils you're not considering.
Yeah. That's I think that's a good place to kind of wrap up, because that kind of sums it all up, is that you need somebody who can consider the things that you aren't considering and can tell you about them rather than get browbeaten into submission by you.
Yeah.
So
absolutely. The other theme, though, you have to real quick is just the hire slowly and fire quickly. I've heard that a lot. And I see it a lot, right? People hang on, for the best of reasons, but it's a burden. It really is a burden. Or hiring too quickly can become a burden for that overhead.
Yeah, well, people are tough, because you end up with, people are always messy.
Yes, they are.
All right. I think we're going to wrap up there. I think there was a lot of good basics in that. And I think the big thing, though, is get a banker, not a bank.
Amen. Yep.
Find somebody that you can work with. If you want to get more information about John or John's bank, you can find it in the show notes over at defaultprofitable.com. If you're listening 3 ways you can help us. You can hit subscribe, you can leave a review, or you can share an episode. John, thanks for being a guest.
Yeah, thank you so much, Matt.
And to our listeners, we'll be back next week with another episode. Until then, stay focused, keep working, stay profitable.